And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And welcome, everybody. It's 2 for Tuesday. But it's not tacos. It's Danny and me. Lance is in an undisclosed location under lock and key. We may let him out soon.
Kind of like his retirement.
Right. With David's retirement, Danny and I are going to lock him in an office. He can't leave.
Never.
You know what his gravestone would probably be? A chart with a 50-day crossing to the 200-day, like a crashing stock that says, I'm down here. Think so?
Fair enough. I like it.
Okay. I was thinking about diversity, equity, and inclusion. And thought that DES would be better. Donuts, eggnog, and seclusion. Because I had a dream about donuts the other night, and eggnog, and seclusion. So if we just did that, I think that would be a better way to go.
So now you're onto something, right? A delivery service that delivers
donuts.
Eggnog donuts.
Yeah. There you go.
To those in seclusion.
Correct. Yeah, to people who don't leave the house. Hello.
It's a little hot for eggnog, though.
No, you ice it up, man. You ice it up. Put some rum and all that. It's all good. But yeah, it is a little heavy for the summer, isn't it? Yeah, it is.
Not a big eggnog guy, but yeah.
No? Okay. I'm going to have to make you some of my Rich Rosso special eggnog. I think a couple of sips of that, and you'll be looking at the world in a whole different way.
All right. Fair enough.
Do you ever see the Addams Family when they mix stuff together and then the steam starts to rise from it? That's sort of what happens when I make the Rich Rosso Happy Eggnog. So it's a very special blend. Well, we welcome you with us, and we still have sort of a muck market. Dow futures down 45. We're still embroiled in this debt scare tactic fiasco that if I watch one more media headline on TV or read anything that says that we're going to heck, we can't pay our bills. You know, it's just this scare tactic, Danny, this false narrative. I was on Nextdoor yesterday, which is scary enough, and there are a lot of older Americans just scared that they're not going to get their Social Security checks. And they don't understand how all this works. And Janet Yellen, I'll leave my words aside for her based on her bombastic commentary lately. But, you got to take a step back, right? And look at the rationale of how much money we bring in. There's certain things we wouldn't be able to do, but there are certain things we will do. And the default is not in the cards. That means, no, we're not going to pay our principal. We're not going to pay our interest. We're going the way of FTX. That is not the case. But you have a lot of people scared, which I think is the objective politically.
Well, of course. I mean, that way they keep people tuned into what they're trying to do, but also to get their narrative across when it comes time to cast our ballots, right?
Yep.
They can come back and say, hey, look what these guys did. And I think it goes for both sides. And so we just have to be cautious with, the narrative in general. And, there's a lot of bad misinformation out there. I think it's really tough, Rich, for people to really get a good understanding as far as what it means. Like, I wish they do a fact check on these articles that are out there right now, because some of it's just so misleading.
It's all headline, Danny. The whole world now is all foam, no beer. It's like everybody will not dig into, it's that heuristic bias, right? You just go and dig, you're at the surface, and you sell stories this way. And people don't read. They don't do homework. They just read whatever the story is. They click on they're on the clickbait, and they just react. Everything's emotional, primal, tribal. I mean, it's just a really terrible way to go. And I felt really bad, so I had to go on Nextdoor and explain. And I never post anything on Nextdoor.
Oh, man, you went down that rabbit hole?
I did. And of
Goodness
course,
gracious.
I'm like, okay, listen, we study Social Security. I will tell you, don't worry. I mean, I sort of felt bad for these people going, this is all I have, you know, and I'm hearing all these stories about, you know, we're not going to be able to pay our bills. I mean, this is what these narratives do to people, and it's not fair. And I even understand older, you know, Americans may not fully understand it. But the Janet Yellens of the world that push muck since she's been I'm not pushing any muck. Go muck yourself. She has been the worst Fed chair. She is the worst. Whatever she does doesn't work. I mean, she's a political tool. And that's the way it is. And somebody asked, where is Lance? He's locked up in a building. He'll be back on... When's Lance coming back? Monday?
No.
Tuesday. Oh, we all have off
We're
Monday.
on Memorex on
Danny
Monday.
and I probably don't have off Monday.
Yeah, you do.
But, yeah, that's what you think.
No rest for the weary.
Clients have no idea of holidays. Holidays do not exist. Let's get the emails and the calls going on Christmas Day, which we're happy to handle.
It beats the alternative.
It absolutely does. We're grateful every day for people that even want to reach out to us. So again, Danny, we're stuck in this trading range, and again, it's this frustration of what direction do we go with markets. Interesting story out of Bloomberg today. You know, we just added a little bit more to our energy positions, right? So Saudi Arabia's top energy official issued another warning to oil short sellers. In other words, they're saying, listen, hey, don't think that prices are coming down anytime soon. You got China coming back online, getting stronger, right? They're holding the keys to the Golden Palace, and they're saying, listen, we're not going to increase production. So you short sellers who think that prices are going down, you've got another story. So some of the traditional things that you think would happen and how the market reacts, say, for example, demand slowing down, thus energy prices are going to slow down. Some of this linkage is going to be broken based on all this climate cult issue, these climate cultists and these energy issues that we're seeing right now, right? Energy policy is going to override that. So you might see, to some degree, of course, you're going to see some some pullback in demand. But global oil inventories are on track to tighten sharply for the remainder of the year. OPEC is saying, based on their own data, a substantial supply shortfall of about 1.5 million barrels a day. So everybody's criticizing OPEC, but frankly, why are you criticizing OPEC? We have the ability to produce. They're just looking at supply and demand and taking advantage of it, frankly.
Well, they're looking after their own self-interest, and you can't blame them, right? I mean, that's
right.
what they're designed to do, and unfortunately, that may not be in the interest of everybody else, but when you're in this dynamic, that's what the design is made for, right?
Exactly. Here we get back. Danny and I have been talking about how this was a white-collar recession. And if you're, I don't know, we got some tagline this morning. What is it, Brent? Brent's going to do it because I never remember it.
A good white-collar job is hard to find.
And it is. This is something Danny and I predicted over a year ago when we get back here on Financial Fitness Friday. Stay tuned.
Daily investment news you can use. Delivered at the speed of the internet at realinvestmentadvice.com.
Wow, Red, whatever are we gonna do over this hot, lazy summer?
Don't you worry, little darling. We gonna break our money malaise. Don't let the summer doldrums sap your money's worth. Register for our next Candid Coffee with Danny Ratliff and Richard Rosso with summertime tips for your idle cash. Saturday, June 3rd. It's our half-year financial checkup, breaking your money malaise this summer. Register now at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So a couple of days ago, I got an email from a client, Danny, that's looking at private investment, a new company, a new sort of hedge fund, venture capital, whatever sexy words you want to throw into it, that is raising capital for a project. And, you know, the returns, the numbers just sort of look strange.
How so?
Well, they're just overpromising. And I think you're going into, plus I wasn't really clear exactly. They were nebulous about the projects. Like, what's the project? Give me an idea of what you're doing. We just, here's the project, what it's projected to do. It's like some hidden secret. So you ever get this, you know, we're doing this long enough where you get a sixth sense that I wouldn't be putting any money here.
Yeah.
Right?
Send me your money, we'll tell you what we're doing.
Yeah, that's what it is. Send it first, then we'll let you know. Like, this is a big secret. So I told the client blatantly, I said, listen, I understand private investments. I think from a diversification perspective, as long as you wrap rules around it, you can certainly venture, understand the illiquidity of them, understand the risk of them. But something with this one doesn't pass the smell test. So sometimes your gut is right.
Yeah.
Sometimes you got to go with your gut and say something's not right. I felt that way about FTX. Didn't you?
Yeah.
So the only person, or one of the only people, because look how many people got roped into FTX. Tom Brady, like all these, like Tom Brady, I understand was a spokesperson and he's getting sued, but the dude also lost, I think, a substantial amount of money. I think him and Giselle lost.
He put a large amount of his net worth
into
it.
Didn't he?
Yeah. Yeah.
So, but, you know, they had to track down Shaq. Like, they couldn't find him. Like, how do you not find him? It's like not finding Connie. Just look in the crowd. You'll find him. I mean, that dude like that can't hide for long. So, because they're trying to serve him because he was a spokesperson. Listen, you know, actors get hired all the time to do things. But the person who asked the best question, and people probably know this already, but is Taylor Swift.
What was her question?
So Taylor Swift, I don't know if you remember this story. They were going to do a $100 million sponsorship deal that would involve selling tickets as non-fungible tokens to her fans. So before she looked at the deal, she asked the question, can you tell me that these are not unregistered securities? When she found
Interesting.
out that they weren't, she turned it down.
Yeah.
Think about the power of that question and then understanding, even if doesn't mean I don't want to say that if it's unregistered, it's a scam. But if it's unregistered, it tells you that you need to take a step back and know the risks or examine the risks. And unfortunately, and like with this venture fund out of, I don't know where, I think it was like Ohio or something, Utah, whatever, there was not a lot of information except give me money and you'll get this kind of return by 2026, but you're not really being clear what it is. You have got to be careful. We see people fall for these kinds of things over and over again. Now, listen, there are people that go into private investments in real estate for a percentage. They do rental real estate. They understand the risks, but you know, I think as the economy slow rolls into recession or something like it, I would keep my money close to the vest and understand if it's unregistered and illiquid that I might be speculating and returns may be too good to be true.
Rich, I think you bring up a lot of really good points. I think that number one, the liquidity aspect that most people just don't understand about the private investment market can be really a bad thing in the sense that you think you're going to be able to get your funds out, and there may not be an opportunity for you to actually have that liquidity event in a certain specific time frame. And even then, they may say, we're going to give you specific windows that you're going to be allowed to take funds out. They may say, we'll only allow up to 5% of the overall fund or 10% or whatever it may be. But if somebody beats you to the exit, you may not be able to get there at all.
Yes.
And so we see a lot of these different types of investments. And I would think we probably let a lot more across our desk that you wouldn't want to touch than what you would actually say, hey, you know what, this actually looks really good. And I like them in the right environment, in the right instant, with the right people.
Listen, there are opportunistic zone funds. There are private equity deals dealing with storage facilities and strip malls and other things. But if I'm going, what I have to keep in mind is if I'm working for a company, and we're going to talk a little bit about why a white-collar job is hard to find, and that Danny and I have been talking about for a long time, that this will be a white-collar recession. If I work at Home Depot in an aisle, even though numbers are soft, Lowe's came out, their numbers were softer than expected from do-it-yourself projects. People are just not doing that, right? It's all about going out there and experiences and so forth. But I am still, if I'm working in an aisle at Lowe's, shouldn't be as worried about my job as if I'm working in a cubicle in middle management, in marketing, or some other job at Lowe's. Right? So what I think in a time of slowdown, I want more liquidity as possible. Like, I don't want anything illiquid. That's my extreme view, everybody. I'm not saying you shouldn't. If you put rules around it, I'm going to have 5% of my money in something illiquid. I still think that's okay. But liquidity is going to be precious. Before COVID hit, Danny and I were preaching about financial vulnerability cushion, having at least a year's worth of living expenses in cash, right? 6 months for the stuff that just you expect to go wrong. And then the other 6 months for the big stuff that could go wrong, like you lose your job or someone in your family does. We didn't expect some big issue to happen, but the people who had done that, we started talking about a year before, a lot of them had called us and said, thank you. That was the best thing we did. It was just luck on the timing, unfortunately, with COVID. And then Susie Orman came out after the fact and suggested that because she's always late. So for me, the illiquidity going through a contraction in the economy, especially if I'm working for an employer and have really no control over my destiny, is not really something I would look at. And that's sort of part of my nature, and that comes in my money script, right? I'm going to be much more money vigilant, and I overdo some of that. Because even my girlfriend Amy goes, you sure do like insurance. Well, insurance is a way to mitigate risk. So I look at it as insurance as a positive. So if I were going to look at a liquid investment, I would try to visualize how it would look through a contraction. And do I really want to go through that right now? Maybe I'll pick it up later at a lower price. Or maybe I'll just wait.
Well, I think I'd also understanding, though, but you love investing in equities, right? So you're not opposed to risk, but it's risk that you know. And I think that, that's a problem, especially when we start to get into private investments. You have, generally speaking, a very concentrated risk in a specific sector, theme, investment, and that can be where you see more issues with it, Rich. Not just a liquidity event, but how much are you going to put of your net worth there? And listen, there's a lot of people out there that do primarily this, but they're looking and they know that they're going to strike out quite a bit, but if they hit one grand slam, it may be worth it for them.
Yes.
Whereas the average investor, I think sometimes we're seduced by the potential of that big grand slam and think about how it could impact and change your life.
Yep.
But you also need to think about on the opposite end of it. What happens if you strike out? What happens if it's bad and you put a substantial portion of your net worth? And I think that's where a lot of people get in trouble. They haven't had access to something like this before.
No boundaries. Greed.
Yep.
Yeah.
Well, you get the accessibility to it now, and you say, okay, well, net worth has been creeping up. You want to say, you know what? It's been a very difficult environment. Like you said, it's frustrating because we've been basically, you've had a really bad year. Now you've got a decent year. Mm-hmm. We're kind of trading sideways, which we will get out of. But, it makes, I think, that we're more vulnerable to those types of pitches.
Yes, you're right. The more stagnant the market gets, even though I'm getting good returns on cash, and those returns on cash are fleeting. You got to remember the great reinvestment risk you're going to have here if the Fed's going to have to do what they need to do and say in 2 years, and that's lowering rates. And we can only sustain a certain level of interest rate levels the way they are. You see, we just based on the national debt, we can't deal with it. So you just want to be maybe a little more cautious. There's nothing wrong with that, and I don't think there's anything wrong with doing your homework. I just could not do any homework on this particular deal. I mean,
yeah. So what's it based on then? Right? It's based on a feeling.
Yeah, it's like
potential projections on something, but you don't even know how you're going to get there.
And then it was about, you should have read the website. It was all this flowery language, all this, it's like someone baked a cake and they forgot the substance of it and they just have a bunch of icing out there. Yep. I mean, I was like, what is this? This multiple paragraphs of saying nothing to me. The last time I saw that was Stanford's website, by the way.
Yeah, I told you.
When I had clients I
had some clients who had money with them.
Yeah.
Yeah, and the this was prior to me working with them.
Right.
FYI, full disclosure. But they showed me and shared with me some of the letters that he was writing, and one of them was actually like the day they were rated, or like right before it. And you think, oh my goodness. I mean, and it was just so eloquently, like very flowery. Everything is great. We've done this forever. It's going to be okay. Yeah. Clearly was not. And when but looking back, the market was 4 or 5% CDs. The guy's pitching 9% out of Bank of Antigua.
Bank of Antigua.
Something's wrong, right?
Remember that bank? It was a pretty pink bank with beautiful little striped awnings
all around.
So it looked like an ice cream shop. We'll be right back.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Wow, Red, whatever are we gonna do over this hot, lazy summer?
Don't you worry, little darling. We gonna break our money malaise. Don't let the summer doldrums sap your money's worth. Register for our next Candid Coffee with Danny Ratliff and Richard Rosso with summertime tips for your idle cash. Saturday, June 3rd. It's our half-year financial checkup, breaking your money malaise this summer. Register now at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
In 1999, a parafiduciary group of financial advisors were busted by corporate giants for trying to operate in their clients' best interest. These men promptly escaped from a high-cost margin environment to the Houston Energy Corridor. Today, still excoriated by their former employers, they survive as protectors of others' fortunes. If you have a problem about preserving capital, if no one else can help, and you can find them right here, maybe you should hire the RIA team.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Part of the problem of the average American is that we've just chosen to live well beyond our means.
Basically, you can buy anything you want out there on a payment. You need new underwear? Go get it on a payment plan.
Underwear can be expensive. If you buy some Jimmy John's, they're not cheap.
Jimmy John's.
And
Sandwich
the point
underwear?
is,
What is this?
But Tommy John's, thank you.
The Real Investment Show podcast
That's why I just don't wear underwear. It's too expensive anymore.
at realinvestmentadvice.com.
Going commando is going to become a new thing for the poor people.
It's going to be a...
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell report, Candid Coffee, and Lunch and Learn replays, plus each day's radio show. Subscribe and bookmark our YouTube channel or just click on the show links at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And we're back. So Lance and Mike have lamented about this for a while, but about commercial real estate and the dangers there. But hey, Jamie Dimon talked to analysts on Monday and said, listen, commercial real estate is still a problem that we're going to have to deal with. Certain locations, certain properties, certain construction loans, and you're seeing credit tightening up because that's the easiest way for the bank to retain capital and to make the next loan. So if I'm investing in liquid investments, especially with real estate and commercial real estate, I am really going to be looking for a substantial return for the liquidity and the risk I'm taking at this juncture in the cycle. That's just a fact. And again, to Danny's point, there will be a lot of investors. Listen, a lot of investors get fooled all the time and get taken in. But the more this market sits there and does nothing, the more it makes investors edgy to look for other opportunities that just places them further into hot water. So again, white collar jobs been a tough go. So you look at job postings from real estate, finance, insurance, advertising have fallen over 500,000 since the end of last year, and that's based on federal data. Employers seeking to fill white-collar roles report it's taking an average of 11 weeks to hire, up from 7 in 2021, and that's according to Robert Half. So everybody is being extra cautious. One, a lot of companies have gotten burned because they're hiring people, and then you see all this job hopping because employees were in such demand. The other part is just that, hey,
or people are working two jobs at once.
Yeah. But for the most part, if you have, hey, I got a degree in marketing or business management and I'm going to work a white collar job, you are just going to have a tough time. There was a great story in the Wall Street Journal about some very qualified individuals that just can't find work on the white collar side. That's when you go to Buc-ee's. They get paid probably just as much and learn more because you're dealing with people every day and learning how a business operates, as opposed to, I do marketing from a cubicle and I have no idea what the heck that means. So I still think, Danny, this is going to be an issue. I still think this softness in white collar hiring is going to continue for a while, and companies are going to get exceedingly more cautious. What do you think?
Well, I think there's a ton of people that are still out of the workforce from the pandemic that just aren't showing up per se. And if you look at some of these studies and you hear some of the stories of what people are going through, where it went from, going through 1 or 2 or 3 or maybe 4 interviews at most, and now sometimes you get like 10, 11, 12, and then not even get the job or not even hear back from anybody. And so I think it's a couple things. You mentioned, employers are being cautious. They've been burned. You really want to make sure you're hiring the right people. And they don't want those job hoppers that people have gone from job to job to job, because the risk and the amount of money it takes to develop somebody, to integrate them and onboard them in your business is substantial.
It is, because now, during the pandemic, companies were looking to look at people with, say, a year or 2 of experience, but they had potential. Now it's more, hey, we want 10 years of experience and no job hopping along the way. We want to make sure you're going to stick around. So as the economy softens, companies are getting more discerning, not because, hey, we got to fill seats, right? And it's happening at companies like AT&T, smaller companies like Stryker, smaller companies as well. So you're seeing the bar being raised for white collar work. And if you've job hopped a lot, now in the past, that was sort of a negative, I think. And then that narrative sort of died. Like, in other words, Wick, listen, we need people. So if you have potential, we understand you've been job hopping, we get it. Now it's going back to, this person's had 7 jobs in the last 3 years. Not good.
Well, I think we're going back to employers. Here's the interesting thing, that employers have always required and requested loyalty, right? But employees for years and years did just that. But then you feel like it's kind of gotten away from it, especially as you've seen a lot of benefits that have been taken away as well. The employees have not been nearly as loyal because there hasn't been the need to, right? You're not walking away from the pension plan. You're not walking away from this awesome health care. As we continue to see things are watered down, well, hey, I can understand making that move, right?
I think employees and employers over the last 20 years have been quiet quitting each other.
Yeah.
More risks are being borne by or bared by the employee, right? In other words, the employee is taking on healthcare risk with high deductible plans. No longer do you have pensions, so employees go, hey, especially the younger generation. My dad was loyal to this company for years, and he got nothing for it. So now it's like the other extreme. Like, we won't give you any loyalty. We're just flighty. And there are companies out there, especially I think a lot of many small businesses, that value their people so much, they have to work to make sure that their employees are happy, because there is no quiet quitting between those two. It's more, in a small business, it's more of a marriage. And you all got to work together and make each other happy. But the employer and the employee are both very diligent at holding up their part of the bargain. Big companies, it's like running cattle through. Listen, I had that experience where I was before. I thought they treated employees terribly. It was just like a big factory of sausage. And, if you didn't perform, then you were out and someone else would fill your seat and there was really no significance to you. But how many companies are like that? Now they've started to change it a little bit. Employees got more leverage on them. right? It became more of, hey, the employees are more important. Now I don't know where it goes. Like, I don't know where it swings on the pendulum right now.
I think you see it swing back, right? I mean, I think that you're going to have to see more and more small businesses. So what you mentioned, right? Small businesses have figured it out. They're saying, we have got to take care of our people.
We're doing it old school, right?
Yeah.
Like,
that's right. We're seeing more and more people open defined benefit plans, 401ks, revamp their healthcare, just their employee benefits in general to retain top talent and or go attract it. And I think that's become a lot more attractive for somebody who's been at maybe one of the big firms, and now they're a little bit more inclined to leave because they don't want the headache, the stress of, your job is on the line every single day.
No.
Because of bad management, right? And then if you're not getting all the bells and whistles that you used to get with it, I don't blame them.
The one lesson I learned, Danny, I learned it too late. You learned it much sooner, which I give you credit for. I would never, ever work for a large publicly traded corporation again, ever.
Yeah.
I think if you want to make impact, you work for a small business, become a very valuable resource to that business. You will learn more, you'll be appreciated more, eventually you'll make more. This comfort of having a large corporation like a Snuggie, that was the 50s and the 60s and possibly part of the 70s. But it isn't anymore. How many times do you go to bed at night and you go, thank God I'm grateful for what the company we have, the clients we work with, the employees we have, and we don't have to worry about getting fired. In other words, our destiny is in our control, and there is a piece to that than compared to working for a company and going, oh my God, another slowdown's coming. Am I going to be on the chopping block? Right?
How are they going to change your pay today? How are they going to mess with what you can do for clients?
How are they going to mess with your
I mean,
compensation? Yeah. What bonus am I not getting? I understand sometimes why employees don't care anymore. Because if you took me, a very passionate employee, and took me to the point of apathy, which my last company did, it has to take a lot. For this generation, it's not going to take a lot because they've learned from all the generations before them. Whatever job you have, you do the best job you have. You make that job the most important job, and you'll get noticed. But I tell my daughter all the time, small company.
But even then, I've got buddies that
Mid-sized
work
company.
for very large companies.
Uh-huh.
They said they'll walk out the door. They've got there at 5 or 6 a.m. They'll walk out at 8 o'clock, not seeing their kids at all that day. And their manager gives them a look like, where do you think you're going?
Yeah. I used to get you don't have to go to your daughter's recital. We don't do that here. I'm like, and if I work for a big company, well, I'm going to have to say, well, now I'm going to get looked negatively.
Oh, you
just
will.
because I have a family, right?
Correct.
No way to live. This generation somehow has figured that out. Now, I think in some ways they're a little loony, but they understand some of the things that we probably should have done and what you're doing
A long time ago.
A long time ago.
Oh,
So I think
when
that's
you mentioned that, I just thought of the stress you used to deal with on a daily basis.
Oh my gosh. When I used to go on TV, I had this twitch in my eye. It looked like I was winking at the audience. Hi, everybody. I'm Rich Rosso. No bueno. We're very grateful to be here with you this morning. Oh, we get back. We got a lot of other stuff to talk about. I have no idea what, but we will
figure it out.
We got a whole bunch of stuff that we can get to. Stay tuned. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Wow, Red, whatever are we gonna do over this hot, lazy summer?
Don't you worry, little darling. We gonna break our money malaise. Don't let the summer doldrums sap your money's worth. Register for our next Candid Coffee with Danny Ratliff and Richard Rosso with summertime tips for your idle cash. Saturday, June 3rd. It's our half-year financial checkup, breaking your money malaise this summer. Register now at realinvestmentadvice.com. Candid Coffee with Ratliff and Rosso. realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number. It's 855-RIA-PLAN at realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
So you heard the ad for our next Candid Coffee, Breaking Your Money Malaise. The voices you heard is Erica, who's our social media person, and Brent Barry White Clinton, because he's trying to be red, but he sounds like, oh, baby. It's a long, hot summer. We'll figure something out. I mean, that's the, is that the voice that got the wife? Is that, you use that on date night? Or
No,
what?
no.
It's not.
No.
You just use your normal golden tone radio voice.
I said, is anyone sitting here? And sat down next to her.
It's like the George Strait song, The Chair.
That's how that went. Did you know her?
I knew of her.
Okay.
Yeah.
All right, Brent.
Oops.
Go get her. Good job.
Yeah, baby.
Yeah. See that smile on his face? It's upside down. So, what? I'm kidding. We're going to have a lot of great money-saving tips for summer, because stop focusing on the market and start focusing on your life. What to do with idle cash, planning ahead, rebalancing or looking at your finances in a different way. Some ideas on cash yields, but also the dangers of cash yields. So we're going to come up with a whole bunch of tips. And if there's a tip, so you go Saturday, June 3rd at 8 a.m., sign up at Real Investment Advice. And if you have a tip, let us know. Is there something that you do, whether it's financial housekeeping, whatever you might do that is helpful? We would like to know. We would like to know. I know a lot of clients that catch up on some of their reading, financial reading and so forth during the summer. I don't think that's a bad idea. But again, so the Candid Coffee was designed so that you share your ideas with us, share your concerns with us, go through it. It's an open forum. Dan and I are there in the morning before you start your day, so please sign up for that. If you haven't signed up for Lance's Before the Bell, or what is it called now?
Yeah, Before the
It
Bell.
is Before the Bell. What was it before?
3 minutes on markets
Yeah,
and
now
money.
I like the Before the Bell better. So Before the Bell, and
He couldn't keep it 3 minutes.
I don't think Lance could do anything in 3 minutes. Everything's got to be at least 10. Like he'll yell at me for at least 11. So go ahead and sign up for his newsletter. He's out for a little bit on vacation, but he's also still writing. He's on our calls and working through that. He just has a better view than billboards and strip malls. And traffic over there on Katy Freeway.
Yeah.
You know, when there's a crash down there, you can hear it up here.
I know.
You're right. It's scary as heck.
And he's got the corner position on the floor.
He does. He's got that full view.
Like a 270-degree view.
I remember I was sitting in my office and some dude came and just knocked the Toyota sign down.
Yeah.
Off of the Toyota dealership. It was like,
hit it with a pickup truck, and it knocked us offline for the power.
Did it really?
Yeah, knocked the building off the grid.
The adventures of driving. Listen, that's why you don't invest in any liquid investments. You don't even know if you're going to make it through a drive here. All right, so Dow futures they're down about 62 points. NASDAQ futures down 27. S&P down 8. Again, stock futures are slipping, but it's still this wait and see attitude. But Lowe's came in, beat first quarter earnings expectations, but lowered its full year forecast. Just seems like, Danny, people are more apt to spend money at restaurants. Like you said yesterday, restaurants are crowded as heck. Everybody is still going out to eat, doing more experiences and travel. I'm going to be interested to see what travel season looks like. Well, how much driving is going to be done through the Memorial Day weekend.
Well, they just showed 17 million people are estimated to travel this weekend via flight.
Really?
Yeah. I'm not sure what that is in relation to the averages historically, but it seems like a lot of people to me.
Yeah, they just want to go.
It's a lot of baggage to get lost.
Oh, man.
It sure is.
Just saying.
Yeah. Yep. Lots of baggage. People with baggage. Planes with baggage. Lots of baggage. So here's what a lot of people do to avoid baggage. They retire overseas. I've had clients that have talked about retiring to Costa Rica, retiring to Spain. I have one client that's going to, in the next couple of years, retire to Italy, Danny. It was a fringe idea, but more and more, you're seeing Americans looking to start over. And not in a different state, but a different country. So Kathleen Petticourt, she's the founder of Live and Invest Overseas, provides information on subjects that are very important. You got to understand the healthcare quality, cost of living, right? Because a lot of the Americans that are moving overseas have their money deposited in U.S. bank accounts and Social Security checks. But looks like nearly 450,000 people received their benefits, Social Security benefits outside the U.S. at the end of 2021, up from 307,000 in 2008. What do you think, Danny? You get it? I mean, this is something we might have to plan for as clients look at that, but most of that is trying to understand the financial element of what's going on in this country that people are looking to move to. But Costa Rica has been a very popular site for retirees for a while, and I've noticed now France coming up, Italy coming up.
More European countries where it seems like there's more Central America for a long time,
Good
at least
point.
from here in our region.
Yeah.
So if you get a Social Security check and you're living in another country, is it taxed in that country as well as in this country?
Depends.
It does. You have to be, when people have to move overseas, you got to be very you got to be very country specific.
Mm-hmm.
How much paperwork you have, how much in taxes you're going to pay. You even can co-op benefits. There are certain countries where they'll say, "Listen, you have a health care benefit here, but since you're not you're not born here, you have to provide some.
You have to pay into it.
Pay into the system to some degree.
But it is much more cost efficient than typically what you have here, which is why many people are much more inclined to move. But the interesting dynamic to this is that you generally have to show this country, that you have, what your net worth is. You're not going to be a burden on their system, that you have income coming in. You've got to be financially sound, generally speaking, to make that move. Now, you're not going to have to be a multimillionaire, but
you might be able to do it with
a lot less than what you could do here. Yeah.
Funny thing, not funny, but just interesting perspective is many people will still keep their health. If they have a very serious health issue, they're coming back to the States.
Yeah.
They're not totally severing their ties. One, they probably are sandwich generation, and they still have family here, possibly have to be caregivers for older parents that don't want to move overseas. But when it comes to healthcare, they're going to go ahead and come back here. So it's almost like you have to help a client figure out the mechanics of living there most of the time, but then looking maybe to come back.
If you need something major done, who do you stay with? What do you do? I mean, there's a lot of moving parts associated with this, but I encourage people to seek it out. I think one of the bigger things, you and I talk about this when people go into retirement in general, is finding that purpose. What's going to help you get up every day? What are you going to do to remain vital, to remain active, social? And I think that is one of the problems that a lot of people face, is that they get into this new country while generally they've probably traveled there, they've had a really good time and a good experience. But once you're physically living somewhere, it changes that. And so now you've got to figure out, how are you going to meet people? Is there an expat community? Is there other ways for you to get involved? Is there going to be a huge language barrier? And now we're seeing, I think a lot of people are moving, looking at Central America, some of these countries, they take the dollar, so it makes life easier. Some of them are fairly good with English speaking. But Europe in particular, I think, is where a lot of people, like you mentioned, more people are moving there because they don't always have to learn a new language. They can do it a lot easier. Now, I would think I would want to immerse myself, and you'd want to understand how to communicate well with everyone.
I think people that probably do this, just they're a different breed. I would think they tend to be more social. Yep. Like, in other words, they
more adventurous. You got to have that personality.
Yeah, they look at this as an opportunity to change things up, like revive a purpose, as opposed to just retiring in their house and stuck in the same old, maybe in the rut that they're in. This totally takes them out of it. And to your point, Danny, there's a lot more paperwork sometimes, a lot more red tape with a lot of these countries. But frankly, less processed foods. You need a smaller nest egg to live. And the pace of life is very different. I have one client that years ago I haven't talked to him in a long time, but he had moved to Costa Rica, and you couldn't get him out of there. The pace of the lifestyle, the beauty of it. I mean, it was just the environment around him and his wife. They thoroughly enjoyed. And they were very well off, but their money went a heck of a long way. There are so many stories of small towns in Italy that will also sell you a house. One woman bought 3 houses for $3 in a small town outside of Sicily. She had to put about $100,000 into each, but she bought the houses for $1 each and retired there.
There's one of the reinvestment programs where they give you, that's pretty neat.
Hey, man, you don't have to, you retired, you can go wherever you want. It's just interesting to see this perspective. Hey, that's it. That's all we have for today. Tomorrow we'll be back. Hump day, middle of the week. Enjoy you being with us. We really enjoy your time. YouTube people, you guys keep us awake in the morning. See you tomorrow. Thanks again.